What is up, everybody? My name's James, and you're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Monday, everybody. We have a jam-packed week. Very important stuff going on. In particular, rate talks on Wednesday from the Fed, and I think it's at 2 p.m. I can't remember exactly when it is, but it'll be after the market. Predicting a 0.25% drop, so 25 basis points. That's great start. I think it's all priced in currently, so I don't really expect markets to move a lot unless it's a 50 basis rate cut, which would be 0.5%. That would definitely shake the markets, I think. But I mean, it's going to be good news. Overall, more money in the market, usually good for equities. Again, we're concerned about the stagflation potential. That's why I think they're going to ease into it and not do a big cut like 50 basis points. I think they'll stick to 0.25 and then just monitor how unemployment is affecting the economy. So, okay, guys, term of the day today is Golden Cross. For all you technical heads and technical analysis kiddos, Golden Cross, right? We all know what that means. That is when the 50-day moving average crosses over the 200-day moving average of a company. And we're going to talk about Tesla today, so that's why this is important, because it is basically 2 points away. I think the 50-day right now is at 328, and the 200 is at 330. So 2 points away from a Golden Cross occurring. Once that happens, in technical analysis, that is considered a very bullish sign, which, again, here, we understand technical analysis. I would definitely say if I had a weakness, I have plenty of weaknesses. That's not what I meant. But if I had a real outlying preference on what I dislike to do, technical analysis would definitely be it. But it's important to understand the trends in trading and whatnot. So Golden Cross, it is, and for those of you who don't know, two really important numbers with a company, with a stock, 50-day moving average and the 200-day moving average. And that's obviously just the average of that share's price at close. So every day for 50 days, you're averaging that number out, and then you get the 50-day moving average. And then the same thing with the 200-day moving average. And so when that 50-day moves up, obviously that means that more recent positive trends in the stock is pushing it higher. Okay, so once that happens on a chart, if you were to see both lines graphically, you would see that 50-day moving average would sort of create this upward line through the 200-day, and that is considered a bullish indicator. Okay, let's read the news and then let's talk about Tesla. We got Tesla talk. Okay, stock futures edged higher Monday after President Donald Trump said that the U.S.-China trade negotiations were going well. Investors also braced for a key Federal Reserve meeting this week. The Dow Jones Industrial Average rose 78 points, or 0.2%. S&P 500 futures added 0.2%, and NASDAQ 100 futures gained about 0.1%. Top U.S. and Chinese officials for a second day discussed tariff rates and the imminent deadline for a divestment of Chinese-owned social media TikTok. In a Truth Social post, Trump said that the meeting between officials had been positive and that a deal was also reached on a certain company that young people in our country very much want to save, potentially referring to TikTok. Not potentially, obviously referring to TikTok. The U.S. will go ahead on a TikTok ban if China does not let go of its demands for reduced tariffs and tech restrictions. Reuters reported on Monday, citing a senior U.S. official with knowledge on negotiations. As talks between the countries continued, China's market regulators said NVIDIA violated the country's anti-monopoly law and it would continue to probe into the chip maker. NVIDIA shares dropped about 1.5%. Look, when I hear NVIDIA news, I just brush it off my back. They are, what is a great example? I mean, it's like LeBron James. NVIDIA really is the LeBron James. And I just mean they've been around forever. They've endured so much. And they are a force. Absolute force. Tank. Where was I, guys? I lost my... Okay, here we go. Tesla shares jumped 7% in the pre-market after CEO Elon Musk disclosed an insider purchase of the stock worth about $1 billion, his largest buy on the open market ever since his first significant purchase. His largest buy on the open market ever and his first significant purchase since 2020. Traders took the buy as a vote of confidence in Musk and the company, which is attempting to turn its focus towards robotics and electric vehicle competition. towards robotics as electric vehicle competition has intensified. So sorry, guys. It's very early, right? The market just opened, so I'm trying to get this out. So we got news and we got, what rhymes with news? We got news and nothing. Nothing sounds good. Okay, the strong gains come after the latest economic data showing a weakening labor market, and tame inflation spurs hopes that the Fed will cut interest rates when it concludes its meeting on Wednesday. The market was last pricing in a 96% certainty that the central bank will lower interest rates by a quarter percentage point, with a meager 3.6% likelihood of a steeper half percentage point cut, according to the CMA FedWatch tools. Lower rates could continue to support the stock market, which has received a boost from investor enthusiasm surrounding artificial intelligence. And despite the risks to the economic outlook, investors will also be watching the Senate to see if Stephen Murin will be sworn in as Fed governor in time for this week's FOMC meeting. Okay, guys, I'm so sorry about the reading. I'm going to get better at reading, okay? I'm going to get hooked on phonics. If you're a millennial, you'll know what that is. And I'm going to bump myself back up to that 12th grade reading level that I had in 5th grade, supposedly. Okay, guys, let's talk about Tesla. This, man, I got 9 minutes. Perfect. I can really dig in here. When I started my career in 2016, I can tell you I knew absolutely nothing. Absolutely nothing. I didn't understand PEs. I didn't understand fundamentals, technical analysis, qualitative data. I didn't even know why someone would invest in an IRA versus a Roth IRA. I didn't conceptually understand these things. So Tesla, I remember I got $3,000 from my grandpa, right? He passed away. That was the inheritance I got. Blessed to even have a grandpa and blessed to even get an inheritance, right? So many people don't even get that. I put some of it in Tesla, okay, in 2016. And I wish I would have put all of it because I would have 6 figures now. But I had put some of it in Tesla. It was the very first stock purchase that I really ever made. And it did really, really well. I'm trying to figure out how to say this without making myself sound stupid. But I took it out. I think it went to 7,000. I took it out and I partied, right? I had a good time. I didn't really quote unquote party, but I spent it, enjoyed myself, treated friends. I didn't really do the right thing that I was supposed to. And I think of that now and I look back and I go, man, that was maybe your worst investment decision ever. And now I'm looking at Tesla. So because I did that, in 2017 is when I took it out, I haven't been the biggest fan of it. I sort of have this aversion or like disdain in the back of my head about Tesla. And I did that until 2024, literally until last year, where I started understanding what Musk and co. are trying to do. Okay, Tesla is not a car company. And this is the biggest mistake that people make. They think that they sell electric cars. Okay, that's what they do. And it is true that part of what they do is sell electric vehicles. But that is not all they do. Tesla is not a car company. They are a technology company. And they have multiple sleeves of revenue that are going to absolutely be a necessity and be competitive forces in this AI and technology revolution we are having right now. Okay, the first one is battery packs. They are trying to create stored battery power at a capacity we have never seen. Okay, they're trying to make that Energizer Bunny look like a little weasel running around. Okay, these battery packs are the real deal, and those are going to be valuable. Okay, even in places like data centers. Okay, that's one. The second is going to be this robotics. This robotics industry is going to grow. I think I heard, I can't remember who it was, so forgive me for that, but in 5 years, there will be robots in houses. There will be. And whoever told me that, the way they said it is just how I said it. There will be. And the confidence in it, it kind of scared me, right? Because if you haven't seen iRobot, go see iRobot. I absolutely see it transitioning this way. Even the vehicles in iRobot, where there's like self-drive and there's taxi mode, I mean, those things are going to happen. And guess who has 25 years of data on cars, on driving data? It's Tesla. Okay, so the robotics, and the self-driving, that was the third one I wanted to mention. The self-driving is the real deal. Okay, now there's Waymo, which is owned by Alphabet, and I've been in a Waymo vehicle, very impressed. I loved it, big fan. I just think Tesla they just have such a heads up with all of this data they've been accumulating of driving, of satellites, of roadmaps, of everything that their computer cars have been able to track, store, and internalize, and then make actionable insights out of all of this data. It's going to increase the likelihood that their self-driving taxis are extremely efficient and extremely useful. And on top of that, if you own a Tesla, you would be able to Uber out your vehicle during the day. So now your car that's going to pick you up at 5 p.m. is also going to spend all day giving rides to people all over the city. You're going to make money while you're working. Okay? How cool is that? Just that concept in and of itself is awesome to me. Okay, so those are the 3 reasons why now I'm such a huge fan of Tesla, regardless of what the share price is. They've made money because they've sold electric vehicles. And now they're taking their data that they did from that side of their business and implementing it into 3 others: battery packs, self-driving taxis, robots. That will, seriously, ask yourself, in not even 5, but 10 years from now, what is going to be happening? It's going to be all about data. It's going to be all about what have we taken, or actually even given, to these websites, to these companies with all of these privacy policy statements that we've been signing without looking at them, right? Apple, every update, we have to submit that we read their software update, their privacy policy information, and nobody reads it. We just signed that bad boy. All of that data that we're giving up is going to create something. And this is one of those things it's going to create. Okay, this AI robotics industry is going to absolutely explode. And it is possible there is a big dip before then. That's absolutely sure. But if I was the layperson, I would invest in it. Every dip there is, I would invest in it. Even if there was a 2001 crash, tech crash like there was, like the tech bubble, which I don't think can happen. We'll talk about that another day. That probably can't happen again because the way progress works is it's exponential over time. So I don't think that could happen, but maybe it could. Who knows? Too many variables to decide that. But a couple of things about Tesla that I really wanted to mention, and why you can't just look at the fundamentals. Everything I just gave you right there was qualitative data. Okay, it's saying what is their competitive advantage, where is the company going, what are they focusing on, where are they headed, and what are their goals. Right? That's qualitative data to me. Now, when you talk about fundamentals, we're talking about PE, gross margin ratio, PEG ratio, price to sales, price to book, enterprise value, all these sort of, they're super valuable. And if I had to rank it, I would go fundamentals, First, 1A is qualitative data, 1B is fundamentals. And I know I'm going to get a lot of hate from other money managers out there for that, but I see the vision is so much more important than the numbers at first, right? Numbers will validate the vision, but the vision's got to be good, man. They got to be good. And so yeah, 1A, 1B, and then I would say technical analysis is the third one. Technical analysis to me is a lot of momentum, right? It's just where is the push? Where are dollars going? Where are dollars pushing the stock, higher or lower? So, and Tesla's one of the most volatile stocks. Traders play with that all day, right? Options, momentum plays, even leveraged ETFs. I know I have some leveraged ETFs that I probably should not have, but I wanna try to play the game a little bit. But owning Tesla to me is a very, very strong play. Their PE is pretty miserable, but it's nowhere near as bad as Palantir, which we love here. Their trailing PE 12 months is like 235. Forward PE is 156. I encourage you to not look at the PE. And I'm not saying don't ingest. Ingest is the right word, right? Don't ingest the data. I'm not saying that. Definitely do. I'm saying take it with a grain of salt, because Tesla's vision is very, very good. And it's been on our stocks to watch list for 2 years now. So, all right, guys, that is it. I am over my time. I just wanted to encourage you. We have some good news probably coming this week, so stay steady and be prepared. The interest rates info is already priced into the market, in my opinion. We probably could go higher another 1%. I don't see anything from the interest rates really causing that unless their outlook is like, hey, we're going to have 3 more cuts before the end of the year. If that happens, expect some more boom in the market. Guys, that's it. As always, invest early, invest often. We'll see you next